Hello, everyone. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Virus Turns Our Housing Market. Today is it's May the 21st. I'm Randy Patrick, your host, putting the realism back in real estate here, and welcome to the channel today. We got lots to talk about. Well, actually, we don't have a lot to talk about. There's a lot of news going on. I'm going to try to break it down into better segments now as we go forward, just because literally I could do videos all day. There's always something coming up every hour in the hour. There's something new about the housing market, and it's tough to figure everything out and try to find out where things are going. Even though I think I got an idea what's going to happen, we still want to make sure that we are, I guess you could say, accurate in our predictions and looking at stats to make sure that what we're talking about seems to make sense for the future. So, by the way, if you're not already a subscriber, if you could do me a favor and subscribe to my channel and help it grow, that would be most appreciated. Thanks very much. All right, let's move on to the next scene here where we can start talking about what's happening in the world of housing. All right, so today's focus is going to be on two things. Basically, we had a release of information this past week from the Census Bureau or Department of Labor, which is the housing starts. And we're also going to talk about today's release from National Association of Realtors with respect to existing home sales. So let's start with the housing starts. So first of all, as you can see that the housing starts and permits plunged to 5-year lows, and really having, as they say, having already collapsed in March. And now analysts expected further terrible weakness in both housing starts and building permits in April as the impact of lockdowns really escalated, and the data did indeed come in ugly. There you go. So housing starts fell 30% month over month in April, and that's worse than actually what was kind of expected. So it accelerated considerably from the 22% drop in March. This is a record drop, by the way. And building permits fell over 20% month to month in April. That's slightly better than the almost 26% that was predicted, going forward. So things aren't looking good for housing starts. Now, housing starts basically are contract signing. So you go to a builder or a on your lot builder or a new home tract builder, you sign the dotted line, and yep, I want to buy a house from you, and that starts the process of them. You're whatever, you're picking your lot, you're picking your stuff, they're getting the loan processed, they're going to eventually get to the permitting stage. This starts off the whole process of the new home sale and completion. So there you go. This actually I borrowed from, it's Mish Talk. I think his name is Mike Shedlock, and this is he likes to put these graphs out. He gets some of the basic line graphs from the Fred, and then goes from there. So this shows the year-over-year housing starts, permits, and completions year-over-year. So we can see at the very right of the graph, so the past month, that basically the past couple of months we've just seen a plunge. It hasn't been this bad, really until think about it, back to where it looks like around 2011 or just before 2012. So not very good for the home builders. A little better than, of course, the housing crisis, which that's the gray bar in the middle there between 2008 and 2010. But again, what's been going on here is that we've got a pandemic going on right now. You're self-quarantining. Things are shut down. So whether you want to go out or not, you may not feel comfortable. So that's obviously affecting people going to, the new home developments, the model homes, engaging the builders for new home purchases. So clearly that's taken a big drop here. Month over month, yeah, we see how the month over month kind of works, and that's definitely dropped in April. Both April and building, sort of both housing starts and building permits took a pretty big jump from the previous month downward, and units completed, that's just basically stuff that they've already had underway being completed. So that was dropping as well too. We don't know whether that's a reflection of previous month's sales or just the fact that things have slowed down, and maybe they didn't have tradespeople out there. Who knows what could have delayed completing of houses that were already in the build process here. So that one I don't know about. But again, we can just see that everything is kind of taken a back seat now to the virus and the shutdowns and lockdowns. So that's the scoop right now. Extrapolating this over a larger period of time, you can see that we had a tough time with the new house sales back at the end of the last housing crisis. It slowly made its way up, a little blip here and there, and now we're seeing it sort of trend downward in a very drastic measure. As one woman, I've quoted her a few times, she is a lady from the Wharton School of Business, I believe, in Pennsylvania. She said, we've seen the last housing, crisis play out over a period of 3-4 years. We're seeing this play out in a period of months. So everything is compressed and dramatic and extreme, unlike what happened in the last housing bubble crisis crash. So again, we're at the front end of it though, so we're going to see what happens. But just you can see that everything's stats and graphs are pointing down. That's all you need to know. Things are going the other way. Now, people ask me and they go, well, does this mean I should go into a builder and see if I can cut some deals? I'm like, why not? I mean, I can tell that builders are going to want to move property. They've got developments that are underway. They may have spec homes and model homes they want to move on. Out with better pricing. They'll probably be offering you incentives now, etc. To get into deals. So it's probably a good time if you're looking to purchase a home through a builder. I would say definitely go out there. However, just ask for rebates, ask for, closing costs, reimbursements, ask for what specials they have on, rates, the whole bit. I mean, a lot of builders can bundle in, use their title company, use their mortgage company or their mortgage affiliates, and will offer you upgrades, closing costs, rebates, etc. So there's tons of things that, I've seen them do for buyers lately. They may be more inclined to do that right now. So good, worth checking out here. Funny thing, though, is that, there's an article, when we see the lines going down the other way, what do we got going on here is we got home builder sentiment bounces back in May after a record plunge in April. Well, when we take a look at this, we had a home builder sentiment was high in December at a 76 count. It dropped down to 30 last month, and which would have been, I believe, March. So, of course, April with what's going on, and it went up to 37. So as they say, anything above 50 in the home builder sentiment is positive, according to the National Association of Home Builders. I guess you could say going from a 30 to a 37 is an uptick. I wouldn't call it a bounce. It's not like, all the builders are going, hey, we're above 50% here, things are great. I think it's still going to be very dicey and difficult for home builders as time goes on. I didn't talk about this today or put a slide in, but I did read beforehand that some of the home builder stocks, for whatever reason, had a little bit of rebound, some upticks. Now, again, that could just be over the course of the past couple of weeks. I don't know whether that's, in reflection to larger losses earlier in the year or the past couple of months. So the comments were, hey, we see some movement going positive from the home builder stocks. Who knows? I don't know whether you can correlate really stock prices and what's happening in the marketplace exactly these days. I don't think there's a good correlation there. But so this is what we got going on in the new home building segment. And a lot of these statistics, as say a few weeks go on, they get revised with better data and can actually be worse, what we've seen. So that could be a potential issue as well too. All right, let's take a look now at existing home sales. So the existing home sales were released by NAR, National Association of Realtors, today, and the home sales dropped by 18% in April, and decline in inventory pushed prices to a record high. So I know that NAR is very happy now, because they go, hey, this is like the 94th month in a row that we see our prices going higher and higher. That's just great. But I think again, this is going to be a short-lived phenomenon, and we'll start seeing some realism come on board as time goes on over the next few months. Now, one thing I do want to comment on is that realize that if we see if we see sales activity dropping, all right, realize the sales activity was really from contracts that were signed, maybe early April, maybe March, maybe February, mid to end February. So, just before the coronavirus was sort of coming on board, people were still out looking at houses, and the thoughts or the sentiments and the concerns were still seeing too high of pricing. Yeah, mortgage rates are coming down, spurring some buyers to come forward. So again, how much coronavirus has slowed the sales, I don't know yet, because again, I think next month we'll see. Again, realize that contracts closing April were from contracts signed in March and February. So, if you take a look at, May stats will be contracts signed in March and in April, and then I would expect we'll see a lot more declines coming because of that. So please keep that in mind. So just, sales of existing homes fell almost 18% month to month, and we're 17% lower than 2019 on a seasonally adjusted basis, according to NAR. The drop in closings is the largest one-month decline since July 2010, when the homebuyer tax credit that was put in place to stimulate the economy after the housing, when we had all the housing crisis and foreclosure crashes and the whole bit. So that little stimulus was designed to get buyers back in the marketplace. Well, when that was removed, numbers went down, and so we're kind of at that level again. So where the amount of sales activity being so low is from basically almost 10 years ago, if you think about that. The supply of homes fell about 20% annually, and it's the lowest April inventory figure ever. Now, of course, they say the drop in inventory pushed prices to a record high. We take a look at the record high, and what we got going on here is the fact that the median home price for April sales was up 7.4% from the previous April to a $286,800 value. So NAR is happy to say, oh, look, this is the 94th or 93rd month. I forget what it was. I don't really pay attention to that because, again, it keeps going up every little bit, clearly because of previous sales and possibly from a lack of inventory that's out there. We don't know yet. That apparently is the culprit for the increase in home prices across the board here, but we'll find out more again as time goes on. So that was the big news from NAR here. If we take a look regionally, I can tell you that sales decreased every region across the board. The Northeast fell almost 17%. The Midwest fell about 12%. The South dropped almost 18%, and the West had the biggest loss of it all, dropping 25% on a month-to-month basis. So that's kind of what we got going on here. So clearly the West, where there's more expensive properties, are taking a beating. Also, many more people live out there as well, too. If you take a look at this, this is just, NAR puts out this little graph package as well, too, that I imported here. And you can see that, when they talk about an annual rate, so typically what we do is we see about between 5.5 million to 6 million homes are going to be sold on an annual basis. So every month they sort of review the, we'll call it seasonally adjusted annual rate, and they kind of figure out where things are going to be at. So we can see that, if you take a look at the sales, it plunged big time, and therefore the rates were adjusted much lower from where we are in April of 2020. So, we'll see where that line goes. But again, trending down, which is not that great a thing for, the home industry here. Take a look at this. Now, clearly we can see peaks and valleys. This is the existing home sale price, which is at another, as they say, a record high. So it looks like it did go a little higher than sort of the mid-2019 price point. Looks like June or May or June probably had the highest price point. So we're back up above that right now. So again, 286, almost 287,000 is our median price point. Now, if we take a look at percent change, clearly, yes, we saw, we can see that, March had, a big drop in sales. It didn't have the big growth. And guess what? Bang, here we go. Now it's a bigger drop for April sales across the board. Now, this is a chart that I always like. It's the market conditions. And what this does, this shows sort of what's happening out there in the world. So we could see now that the darker sort of pinky red is 2020 in April, and the lighter shade is last year's April, so year-over-year difference. So we can see that first-time home buyers actually increased their presence in the marketplace. They were up from 32 from the year before. Sales to investors have dropped 6 points from 16 to 10. Now, don't know whether that was because of a lack of inventory, whether it was because price points have hit a point where investors are going, I'm not paying these prices, this doesn't work for me, so we don't know yet. But when you take a look at the cash sales are down 5% from 20 to 15. So for me, I kind of go, well, if investor sales are down, a lot of investor sales are cash purchases, and therefore we see cash sales got dragged along down with investor sales as well too. Maybe there's a correlation there. On the distress sales front, they maintained at 3% across the board. The distress sales are made up of short sales, so active short sales in the marketplace, found the MLS, that were closed on. That's part of distressed sales. The other part is what we call REOs, real estate owned or bank owned properties. These are homes that have been foreclosed on by the lenders, and they are put out to the general public for sale via the MLS. Now, the general public could be first-time home buyers / owner occupants, or they could be investors as well too. They just keep REOs under one sort of, under the distress sales kind of moniker. All right. So again, but to my point though, when you take a look at the distress sales, to me this is a very telling number, but also the most opportunistic number for what's going to happen in the future, which we'll talk about in future videos, and obviously, what I talk about on my trainings and things like that. So that number will be increasing, and that's where the money is, or the opportunity is, if you'd like to participate in real estate or buy yourself a cheaper home. All right, so when we take a look at this here, going a little bit farther, we can see the sales distribution. So the South always typically has a lot of the sales. Midwest comes in second with 25% of the overall sales. The West at 19%. The Northeast only 13% of the overall sales for the month of April. Now the Northeast, typically is colder still this time of year, and you don't see many sales going on. I know that different markets up in the Northeast, like the New York City area, had definite slowdown in sales, especially in the higher number side, of the higher price points and properties. So again, you see it's reflected here in this sales distribution across the board. If we take a look at the national supply level, well, we can see the green line on top is the condo supply and co-op supply. The red line is single family homes, and the blue line is the blended overall home availability. So we're at over 5 months supply for condos, a little bit maybe under 4 with respect to the single family homes, and we're averaging out about 4.1 months of supply. You will hear that some people say a 5-month supply is indicative of a balanced market, which means you have this an equal amount of buyers and equal amount of sellers, so things should move along. Some people say it should be 6 months, so it all depends on your perspective. I prefer 6 months as well too. So, but we got about 4. We have 4. I guess 4 months worth of supply, which isn't too bad. That's a little bit of a growth over the past couple of months. Now, if we take a look at this here, the next slide, this shows the percent of sales changed by price range. So it's extreme on both ends. On the low end, the $0 to $100,000 price point for homes saw a big decrease in sales activity because not enough sales, not enough volume there. It's always been the case that they always lead the lack of sales categories. And again, this could be from either investors not buying, first-time home buyers not buying, other people aren't buying for many reasons. And on the other side of the extreme, on the far right, the greater than $1 million segment, had 30% less sales as well too, because you find that when you have uncertainty in the marketplace or stress in the marketplace, the more and more expensive homes tend to sit on the market longer, and people wait for major price decreases. And then on the other side, the cheaper homes, it may be a factor of buyers aren't available. This could be your non-bank buyers, your non-QM buyers, the non-prime buyers, with a lot of those mortgages that were pulled back. Potentially that could have impacted some sales there. We don't know. That I'm just surmising what could have happened. But you see it's in the extreme on both sides of the fence here. All right, just to sort of, when we look at this overall, we see that the existing home sales, again, 4.33 annualized, dropping in sales almost 18%, year over year almost 17%, up to a new record, which was a 7.4% increase for the previous year. Our new record, 93rd or 94th month in a row of median price increases according to NAR, and we're looking at 4.1 months of inventory out there in the market right now. So what should you do? That's up to you. I mean, first thing, if you're looking to buy a home, I'd go to your lender, number one, and say, am I still pre-approved? Have your programs changed, etc.? Do I still qualify? And then if, because we're seeing some increases in purchase mortgage applications, and we're seeing some decreases with respect to mortgage rates, maybe you're at a better rate point now. So it's worth seeing whether your buying power is increased and what the opportunities are. However, I'm not suggesting you buy at the peak of the market. So even though there's lack of inventory, your buying needs may happen, or may need to go on up forward because of the lack of inventory and the good mortgage rates. I don't suggest people buy at the peak of the market unless you have to. And if you do, then try to cut as best the deals you can, negotiate, lowball offer, ask for concessions, whatever you can do to get better pricing. Okay, so keep that in mind. I still think we'll see some lower pricing as time goes on. But I was reading today, we've actually got situations where in certain parts of the country, they're seeing, they call it price bidding wars. Now, a price bidding war to me, is usually happening, in a robust market. So, for example, something was happening in Connecticut, and the thought was, well, we have people who are leaving New York City, going out to the burbs, and there was some price wars going on. So, and bidding wars. Now, what the volume of that is, I don't know, and that's too early. That's for a future video, a future video for me to talk about. So, let's not headline hunt and get excited until we delve more into some of these anomalies in the marketplace right now. All right, guys. So again, I want to thank everybody for the views, likes, and comments. If you'd like more information regarding buying a home, selling a home, there's my email. Reach out to me. If you're looking for more information about what's going to happen with respect to the marketplace and the changes and would like some training on real estate, let me know. If you're looking to buy off-market properties for investment, contact me. Let me know. A lot of stuff going on here. There's a lot of good opportunities if you know how to go through them, sift through them, find them, negotiate, and grab them. Okay, even though price points could be high, there's still a lot of stress in the marketplace now. There'll be more stress coming forward. Again, you make your money when you buy, and as long as you're getting a good deal, doesn't really matter when you buy. All right, guys. So again, appreciate everything. Look forward to speaking with you in a couple of days. All right, take care.